Hello and welcome back to this new puzzle. Today we are going to analyze gold. The topic for today will be why is it important a higher time frame analysis. So let's go on the gold charts and we are going to look at for the details. On the monthly chart that I'm looking at, we are going to check the two candles that created the double top formation. This is a potential double top. What happened at this moment? Look at the candles here. The price, after tested this area for the second time, this was located on August 20 and the second one was located on March 22. And the second area is on March 22. We can see that price reacted and moved down. However, this was a bit strange overall when everything began in March here. The reason is because if we are going to look at the inflation rate for the US, we are going to look at that on March the inflation rate was reported 8.5%. And as we all know, a higher inflation rate, it means that for the assets like gold that are also classified as safe haven, in a normal situation gold should have increased higher from this point. But what happened is that we saw the price moving lower, and as we can see also the inflation rates on the coming months increased up to July, as we can see at this point 9.1, and we can see that on July price reached the bottom. There is one simple reason. The first one is that the market was overbought at this point, so someone has to sell, and that is why the price didn't keep rising at this moment here. And on the other hand, we saw the US government that they begin to talk that US is good, the economy is performing very well, we are increasing interest rates. And this is the reason that gold began to move down. But in normal situation, gold would have been appreciated too much at this point. So it should have been much more higher from where it is now. However, let's suppose that we don't know the data, what happened. And we are looking at that during March, price closed a very long pin bar candle or a hammer candle, inverted hammer. So this is showing that liquidity is going away, is moving from gold here, and the price should have moved lower. This was one thing. However, if we are going to look at on the monthly where we are actually now, price tested all of these areas, and look at how beautiful we can see on the monthly. The first one was in June 20, the second one that we can see, the second touch, was in March 21. So all the time that price came here, we can see that it bounced up again. The second was the second month, April 21 again. There is a simple reason, because price has to accumulate volume before it moves up again or before it changes direction. The next one was on August 21. Very interesting point again. The second one was very close on September, as you can see here. And the last one was seen in July 22. So only by taking in consideration how the price reacted during the previous time close to the support area that is located close to this point, 1700, let's say, at this area here, price reacted all the time and it bounced up again. So this is getting very interesting, and when price came close to this zone, it was very obvious that we should have seen a very nice price movement from this point, because price showed it to be very strong in this area. So the support area showed to be very strong also on the previous time. But what do we have here right now? So as you can see, we can see this movement. Price was up, it came down, and now we can see price to come probably close to the middle part of the structure, and it can come down again as the previous scenario, or probably it can move up. So let's go on another time frame. On the weekly time frame, this is more clear. As you can see, look at how the candles closed here. We have two candles that invalidated each other, the bearish one and the bullish one. Look at the next candle pattern formation. This is why the price needs to accumulate volume before it moves on the opposite direction again. So it was very interesting on that part. On the second one, we saw just only a fast bounce from here. So there are several scenarios how the price created the reversal movement, and here we are on our situation right now. This was another one, this was something small, and here we are on our scenario. So what can happen also here is that if you look at the weekly candles, they are looking enough for the price to move up from this point. What I'm looking at is that I'm looking at for a strong support area, and the support areas that we have here are these areas where the price tested several times on the past. It is looking very interesting, this zone. The second one is here. We have several structure areas where we can focus our trading, because it is going to be very strong area all the time that the price will reach there. Look at how many times they were tested as zones. Look at the zones here. The second one, these points, all of these will be the resistance zone. The next one is the second line that we already placed, and look at the third one that is close to this point. So we are having also another area that is going to be the strongest one, the third one. So all of these areas on the higher time frame, they are located at 1800, 1850, 60 approximately, and the third one that we are going to look at is close to 1900. So this is the areas that I'm focused on for the higher time frame analysis. This is why we need to pay attention to the higher time frames. Let's go on the daily chart, and on the daily what we are looking at is that price is just moving up from this point. So we are not looking any reversal yet. However, we cannot rule out the possibility that price can make any move up, move down before it moves up again. So this is a high probability scenario. It can happen. And this is possible if we are going to look at this scenario on the lower time frame. On the lower time frame, what we can see is that price is creating a potential channel here. Just let me clear this part, and look at how beautiful the price is actually developing in gold. We have a perfect channel. This is an ideal one, how the price is moving. So in this situation we can see price to bounce up again, and it has the chance to reach the top of the structure. Or if price is going to break down the channel, we can see a potential development that it can create another potential double bottom and it can bounce up again. So it's very interesting scenario as I see from this perspective. What is very interesting for me is that for the moment price is creating this movement, that it is coming as an ABCDE formation. It is very interesting and price has higher chances to move up for the E wave from this point. So it's not worth to go on the 1 hour time frame. Up to 4 hour, this is very good, and also the structure area that we are going to look at is perfect in my opinion, the first one. So just focus on the area that we actually placed close to this zone. All of these are very good areas for taking profits. 1800 is very good, 830. So hope you guys enjoyed this detailed video analysis. It was a market breakdown for gold. I know that many of you follow gold very often, so just keep an eye on this scenario, because this is going to be a very good trade and potential scenario as well. So let's see how the price will develop now after the non-farm payroll. That we saw that non-farm payroll show it to be very strong with very good employment data. But on the other hand, we can see also that the US is going to suffer again for related with the inflation rate, because that is going to damage a bit the inflation rate on the coming month probably. So thank you for watching. Don't forget to subscribe and press the like button for more future contents. Bye bye.